Good morning and welcome to Opening Bell with me, Stacy Pereira, and I'm here to take you through all the news and cues that could impact your trading day. So let's get started and not waste any time, because first up, let's go to some global cues that are important to track, because that will really set the stage for today's trading day. Now, across the globe on Wall Street, we saw indices that traded mixed. The Dow coming under some bit of pressure, whereas investors are really awaiting that debt ceiling progress. We did see the Nasdaq and S&P 500 though in the green, and one of those stocks really in focus was chip maker Nvidia. Now this has hit a $1 trillion market cap at the start of yesterday's trading session, but ended a little below at 990 billion by the close of trade. So that was an important stock, and also pushing the Nasdaq and other tech stocks higher. But if you look at the Asian markets, they are the ones that open in the red, perhaps reacting to the disappointing data that came in from China, where the manufacturing PMI has shrunk for the second month straight. Now, this is important because China, the biggest manufacturer, you could say, in the world, is something that people look out for cues, and them on 2 months in the trot showing a lesser or lower manufacturing PMI is going to have a dent overall. Whereas we also saw a big swing coming in Brent crude. Now, that was a major swing last night, falling as much as 4%, but not finding that much ground now, because if you look at futures now, they are trying to pare those losses, now hovering around that $73 per barrel mark. You also have the OPEC meet on June 4th, which is what the investors will be looking, and also this overhang that is happening due to the debt ceiling progress. So that is something that investors will have to look out for. Whereas back home here, the SGX Nifty, that one in Singapore, is pointing out to a muted start for the Indian indices. We'll have to wait and see if this winning streak really continues for the Indian markets. But we did see 4 sessions straight where the Indian markets have rallied. So we'll have to wait and watch where it really opens later in this show. But we'll also be awaiting some macro cues, because the fourth quarter GDP number, now that is expected to come better than the previous quarter, is what we're given to understand. At least if we go by reports, it is likely to come in somewhere at that medium of 5.1%, where compared to the 4.4 that was seen last quarter. So that is an important counter to be looking out for. If you look at the fund flows and what we're going to have to work with through this trading session, at least the provisional data shows that FIIs have bought shares yesterday, but to a surprise, the domestic investors, they became net sellers yesterday, selling shares worth 438.93 crores on May 30th. So we'll have to see how that pans out, whether FIIs are going to continue to be putting in, and what the domestic investors also want to do. Now, a whole host of stocks that we'll be keeping in focus as well. Today we have Adani Ports, which will be back a bit on the back of its earnings. That will be an important counter. We also have HDFC Life. We hear that there could be a block deal in today's session, so that is an important counter of what's going to happen there, how many shares and why. There's lots of interest in banking stocks as a whole, even insurance stocks as for that matter. We also have Coal India, which has gone ahead and hiked its prices for the high grade fuel, and this is by 8%, and it's coming after 5 years. So Coal India will also be an important counter to be looking out for. So all that and a lot more. So let's look at each of these stocks and what we can actually see through them. Let's go up first to what do we have with us up first. Let's get on to let's look at Adani Ports, because that one just declared its earnings yesterday, and we had the company record a consolidated profit of 1,159 crore rupees. Now, this is for the March quarter, and you could say it was supported by healthy operating performance in the top line, but it is definitely impacted by that other income which has not come in that great, and also an exceptional loss has come in of about 1,273 crore rupees. If you look at the revenue from operations in Q4 of FY23, that has come in at 5,797 crore rupees. That's an increase of about 40% from the corresponding fiscal last year. So that is going to be a counter to watch out for. Adani Ports on your screens yesterday closing in fair bit higher, but also on the back of those numbers that everyone was expecting to be, to really push up that stock. But that exceptional loss will be something to be looking out for as well. Let's also look at HDFC Life. Like I was mentioning, we are getting to hear that there is a block deal that could happen in today's trade, and that is going to be interesting because we get here that Aberdeen, that is the Mauritius holding in 2006, that is likely to exit the insurance company by selling its entire 1.66% equity. This could happen via block deals is what our sister network CNBC 18 is getting to know from sources. Now the stake sale is likely to take place in the price range we are given to understand of 563 to 585 per share. So we'll have to wait and see when this transpires. We'll get to know by the end of the trading day, but it will be interesting to see how, and especially Aberdeen, a big PE for that matter, exiting with its whole stake. So who will be the ones buying it? That will be interesting to watch. Well, and that's the bell for you. Markets opening, and like we anticipated, in the negative, at least a gap down, but the SGX Nifty had indicated that perhaps markets are going to be taking a breather. So there on your screens, the Sensex also opening lower, but a tad bit, you could say, just a 0.17% lower. Bank Nifty also taking in a little bit of that hit, down about 0.27%. The mid-cap indices, now this was the one that was on the trot yesterday, was quite positive, but now that too coming under some bit of pressure. But I could say just that slight bit of gap down like we were expecting, and we saw that yesterday also where it turned around. Sectoral indices, if we have to go to see, we are expecting auto sales data that comes in at the end of the month, and because of that, maybe the Nifty auto counter there also in the red. FMCG, for that matter, also just down about 0.07%. So that counter also taking a little bit of pressure. But the IT pack, now this one is something that people are definitely betting on. Nifty IT index comfortably in the green. The realty index too in the green there. These are some of the counters that in fact we've been seeing give out that kind of performance consistently. So back the Nifty again there on your screens, down about just about 0.25%. Okay, let's take a look at the gainers. Well, on your screens there, Nestle India, Asian Paints as well as Sun Pharma, those counters up and about in trade. Adani Ports there on the back of those earnings, like we said, in the red. But other gainers, BPCL, Titan, Grasim, all of those counters doing quite well in today's trade. As for the losers, there you have it on your screen. SPI, Hindalco, Coal India, after hiking those rates, they are going to have some bit of takeaway from this hiking, but it's not showing in the counter for now. Well, let's take a look at others. Okay, we have Amar now joining us. Amar Singh, thank you so much for speaking to us. Amar Singh from Angel One is joining us to give us a bit of technical analysis on how we're supposed to look at this trading day. Amar, we are seeing those counters right now after opening bell, a tad bit of pressure, we could say, for the indices as well. So how are you looking at what are the levels that you are really putting out there in terms of the support as well as resistance levels for the key indices?
Yeah, very good morning. See, what we've seen is that we've been witnessing a significant rally, and the major, I would say, the financials have been trading at record highs. Be the Bank Nifty or I would say the Fin Nifty. Nifty, yeah, it's very close to its all-time highs, but overall, I would say the trend is still on the weekly charts. There is no loss of momentum. So clearly tells me that one needs to be on the buy side. We've been saying that for quite some time. And what we are seeing is that now all of the technical indicators on the long-term charts as well as the intermediate-term trend, they are in overbought territory. So effectively, it could mean that we could witness some profit booking, some consolidation, because If you look at Nifty is still almost 200 points from its all-time highs, but I would say that's majorly because of the correction that we saw in some of the IT stocks, primarily on the back of that. Still, I would say the bulls are stronger as compared to the bears, but we'll see some increased volatility. As far as the levels for Nifty is concerned, I would say Nifty's got very strong support coming in the zone of 18,300, 400 immediate short-term support zone. Whereas resistance is on the upside is towards 18,750, 18,800. But still, I would say bias is in favor of the bulls. So any dip should be a buying opportunity, but more or less still we don't see Nifty sustaining above its all-time highs. We could see some consolidation. We could see some sort of volatility in the markets. As far as Bank Nifty is concerned, here the charts are comparatively different on the long-term charts as well. So here again, if I look at Bank Nifty's got very strong support coming at around 43,700, 43,800, currently it's around 44,200 levels. Whereas on the upside, 44,400, 500. But still, I would say that any correction can be used as a buying opportunity, but one needs to be prepared to exit as well or to book profits in the market as well, because we could see some both side movement in the markets.
So, Amar, if I would say one should consider buying on dips as long as the index remains above that 18,500 level, would that be a good way to look at it?
I would say 18,000, if you ask me, 18,500 rather than 18,500 somewhere, because if you see the gap, so gap is around 18,500, whereas the next, the previous short-term top is around 18,420. So somewhere around 18,400. So you always have to have a zone of support. So that always helps. But breaching below 18,500, then we could see some sharp sell-off, 70, 80 points also happening in the markets.
Right, and you were mentioning about the Bank Nifty. Now we have seen it move up, especially yesterday in the second half of the session. We saw it really rally, but that was primarily because of the performance of the HDFC twins, which was the significant contributor. But the overall positive momentum for banking stocks, is that likely to continue? And which other banking stocks would you want to look at this point?
I would say among the banking stocks, first of all, about Bank Nifty, we are seeing some sort of profit booking happening today. And also on the daily charts and medium term and the long term charts, we've seen now the markets moving in overbought territory. So effectively, it means is that the risk reward ratio in terms of buying at these levels could be a little difficult. So from that perspective, we are seeing some sort of profit booking happening. As far as Bank Nifty is concerned, I said around 43,700, 800. That's going to be a good support. As far as banking stocks are concerned, SBI is one stock which still continues to look strong on the charts. We've seen some sort of consolidation happening here. So any pullback in the stock, not at the current levels around 550, 560, that could be a good level to enter, because it's forming a double top on the chart. So somewhere around 600, 620, that's going to act as a resistance. Among the other banking stocks, I would say ICICI Bank is also one stock which is now close to its, I would say, all-time highs here. So it's seeing some sort of double top formation. So one should wait slightly on that. The other stock one can look at is RBL Bank. We are seeing some sort of sharp move in this stock. So sustaining above 165 odd levels, currently it's around 160 to 163. So sustaining over 165, it could move towards 175, 180 in the short term. So this is one stock from the banking space that one can look at. As far as support for RBL Bank is concerned, 150, 152, that's a strong zone of support for this stock.
Right now, if you're looking at the future and options and for our daily traders, now the weekly option front, we saw the maximum call open interest was seen in that 18,800 strike. About 1 crore for that matter contracts were expected on that crucial resistance level. So do you see that really being breached? Are we going to trot higher? What is your take on this?
I would say that as far as Nifty is concerned, 18,000 immediately, I would say 18,500 on the downside, 18,600, 650 on the upside. I would still say the the bias is in favors of the bulls. So any dip can be used as a buying opportunity, but one needs to be ready, prepared for some profit booking also happening in the market. So that mindset needs to be there, because the sort of rally that we witnessed, if you look at Nifty from almost in the last 3 months, Nifty's moved up by not exactly 2,000 points, but roughly around 1,700-1,800 points. So clearly shows that the market has witnessed a sharp rally, and there could be some profit booking, but at the same time, the bias and the technical indicators, they clearly show that the trend is still up. But yes, since the technical indicators are in overbought territory, indicating a heated market, so that clearly shows that you have to be on nimble footing in the markets at the current levels.
Right. Amar, also for our viewers, some sectors or stocks that you really like to be placing your bets on, and why? What would be the reason for looking at them particularly now?
I would say pharma sector is one sector wherein we've seen some really good move over the last few trading sessions. And one of the stocks one can definitely look at is Aurobindo Pharma. We've been positive on the stock for quite some time, from almost the lows. And what we are seeing here is that the stock on the weekly charts also has taken out a crucial zone of resistance. Earlier it was around 600. If you go back in time, so in August last year, it had made a high of 604.5, and that was not able to be. It wasn't able to breach that level. But now we are seeing that it's trading above almost 10% gain from the previous high or the previous top, I would say. So this is one stock which has a potential to rally towards 740, 750 in the short term. So pharma space, we are seeing some good activity there. And apart from that, I would say we've been bullish on ITC as well. So ITC is also one stock one can definitely, this is one stock. Now we could witness some sort of profit booking at around, because currently it's around 445, 450 levels. So, but any pullback in this stock can be definitely looked as a buying opportunity, because the long-term trend for the stock continues to be very strong and very firm. So this is one stock one can look at. And the other stock I would say is ITD cementation. This is also one stock which is very strong on the charts, and it's reached crucial zone of resistance. Earlier it was around 150 odd level, so it's trading above that level. So now it has a potential to rally towards 175, 180 levels, and it has got very strong support coming around 148, 150. So this is another stock one can look at.
Right. So the pharma space is quite interesting. Also, ITC, that's one that people are, very skeptical about. But those are the picks coming in from Amar Singh from Angel Wealth. Thank you so much for joining us and sharing those insights into the markets with our viewers. Let's also look at a couple of other stocks that are going to be a buzz in trade today. Well, we do have in that pharma space itself, Torrent Pharma, which reported its consolidated profits coming in at around 287 crore rupees for the quarter ending March. Now, this was supported by healthy top line as well as operating numbers. It had, in fact, a loss of about 118 crore in Q4 FY22 due to that one-time loss it had taken in of 485 crore rupees. So this is definitely going to be a positive. That counter also on your screens, they're quite trading comfortably in the green. Now, the revenue from operations have come in at 2,491 crore rupees, growing about 17% over the corresponding period in the same fiscal last year. Now, the India business, in fact, has risen by 22%, coming in at 1,257 crore. But the US revenues, that one has not done so well. In fact, falling by about a percentage point to around 280 crore rupees on a YOY basis. If you look at it, the board has gone ahead and given its approval for the fundraising of about 5,000 crore rupees, this via the issuance of equity shares, and has also recommended a final dividend of 8 rupees per share. So that is all that is really auguring well for the stock. You can see on your screens comfortably in the red. Another stock, like I was mentioning earlier, was Coal India. Now, this is the country's largest coal mining company, and the board has gone ahead and approved a revision of the non-coking coal prices, which will come into effect from May 31st. Now, this is important because this is happening after a period of 5 years that the government has actually given this approval and that they have gone ahead and hiked these prices. Now, the price increases of over 8% over the existing notified prices for high-grade coal, which is the G2 to G10 grade, what we call it. Now, this will be applicable to all the subsidiaries of Coal India. In fact, due to this revision, the company will go on to earn an incremental revenue of about 2,703 crore rupees in the balance period of this financial year. So definitely a reason for them to be getting in money for the government into the government coffers, but that stock perhaps not taking it so well. The market's not too enthused about the fact that things are going to get expensive for sure, because there is always that trickling down effect. If coal gets expensive, your rakes get expensive, all that comes with it, trade and export, import, all of that then in turn will have that trickle down effect. So that definitely counter not taking it too well, but it will be a stock that will be a buzz in a trade today. Well, that's all the time we have on this edition of Opening Bell. From all of us putting the show together, thank you so much for tuning in. We'll be back with a lot more tomorrow, but for now, this is it from me, Stacy Pereira.